professional advisors investment detective Matt Morris delivers his verdict on 5 developments in the investment and pensions arenas that have caught his eye over the last month. HM Treasury has launched an inquiry into cryptocurrencies and the technology behind them. No date is set yet, but it is known the Treasury Committee will cover the role of digital currencies in the UK, including the impact on consumers and businesses, as well as the technology behind them. Some of the areas the committee will investigate include whether digital currencies can replace traditional means of payment, what risks and benefits digital currencies bring for consumers, businesses and governments, and if regulation would benefit digital currency startups by improving consumer trust. Another likely focus could be how tax yields can be maximized, a concern of Bitcoin's libertarian founders who see the technology as a way to engineer freedom from central governments. Meanwhile, Venezuela has launched a national government cryptocurrency called the Petro, tied to oil prices, to circumvent U.S. sanctions and raise cash to pay its multi-billion-dollar debts. Verdict: back to the lab. The odd couple Aberdeen Standard Investments has teamed up with a Big Issue to launch the UK Equity Impact Employment Opportunities Fund, which will invest in companies promoting and implementing good employment opportunities and practices. The fund will invest in listed companies based on an assessment of their potential to grow and ability to sustain strong long-term financial returns that are committed to delivering sustainable employment opportunities. The companies must have more than 50% of their employees in the UK and will have to meet impact criteria around paying above average wage rates and being located in deprived areas, as well as offering training opportunities to and/or employing young people. The fund will support the United Nations Development Goal on employment and set out to help address inequality in the UK. Verdict: promising lead. The searchers BlackRock has launched the Dynamic High Income Fund with a flexible approach to asset allocation as income generation continues to be a primary objective for investors. The fund seeks to deliver consistent high income and an attractive total return through a range of asset classes, including global REITs, preferred stocks, floating rate loans, mortgage-backed securities and equity call options. It will be managed by the group's multi-asset income investing team and will employ flexible approach to asset allocation. The fund seeks a balance between consistent high income and attractive total return, while managing risk relative to a 70% equity and 30% bond benchmark. Verdict: promising lead. Going places. AJ Bell is believed to be planning to float on the London Stock Exchange. According to reports, the firm has met with investment bankers to prepare for an IPO, although this news had not been confirmed by AJ Bell at the time of writing. The firm's latest results for the year ending September 2017 showed pre-tax profits increased 29%, while assets under management were up 25% to £39.8 billion. Verdict: promising lead. Frank and Weenie Tilley's annual Spot the Dog list of underperforming funds has identified 26 so-called dog funds compared with 34 in July 2017, a welcome decline in numbers. The level of assets held in dog funds has also declined from £7.6 billion 6 months ago to £6.4 billion this time round. Global equities remain the area with the largest number of dog funds, with 7 representatives across the combined IA Global and IA Global Equity Income sectors. Aberdeen Standard Investments was the only asset manager with 4 funds on the list: Aberdeen UK Equity Income, Aberdeen UK Equity, Aberdeen European Smaller Companies and Aberdeen Asia Pacific Equity. Funds appear on the list if they have failed to beat the relevant benchmark for 3 consecutive 12-month periods. Verdict: back to the lab. Matt Morris is investment director at Carr Consulting.